Well, I will be starting exactly. Just give everyone a couple more minutes to join and we can start, inshallah. Assalamu alaikum. If everyone can give us a quick writing, let us know where you're joining us from, what city and state.
Hey everyone, I'm Rakda. I live in Plano, but I'm currently in Egypt. So
Okay,
yeah.
okay. أهلا وسهلا. أخبار
آه،
مصر إيه؟ أخبار مصر إيه؟ كويسة؟
تمام، حر زي الفل.
حر. القاهرة ولا اسكندرية؟
القاهرة.
القاهرة، تمام. أستاذ زمزم, where you joining us from?
Assalamu alaikum. I'm joining from Plano, Texas, and I live in Plano, Texas.
Okay. Okay. Yeah, I lived in Plano for almost 10 years,
Oh,
and
that's good.
just recently I moved to Wiley.
Oh, close by.
I used to live in between Legacy and Custer.
No, that's good.
السلام عليكم محمود.
السلام ورحمة الله.
كيف الحال؟
تمام بخير الحمد لله.
الحمد لله. بس عشان الكومبلاينس ممكن نتكلم انجلش وفي اي وقت يعني نتكلم عربي. لو عند حد عنده اي سؤال في اي وقت بالعربي ما فيش مشكلة. احنا في الشات عشان تراك لو ممكن كل حد في الشات يكتب بس city و state, هو داخل منين, where are you joining from, which city and state, and, just for my tracking. So far, اتنين Plano. Mahmoud, what city and state are you joining from? Plano, كله Plano. ما شاء الله. Yes, we'll give everybody almost starting, فأنا ممكن أبدأ ولو حد تاني دخل ممكن أعمل كده ريكاب. لو ما عندكوش مانع في حد لسه داخل. السلام عليكم عمرو.
وعليكم السلام.
عمرو, what city and state you joining from?
I'm in Houston, Texas.
Houston. أول هيوستن عندنا 3 بلينو, فأول واحد من هيوستن, دالاس اريا, هيوستن اريا. تمام. احنا تقريبا حوالي 4 دقايق بعد, فممكن نبدأ, ولو حد داخل ممكن ايه ن- نعمل مرة تانية يعني, نحاول نريكاب. طيب هو لو ما عندكوش مانع, يعني تحبوا عربي ولا اتكلم انجلش, زي ما انتوا عايزين, وبرضو الأسئلة برضو عربي وانجلش الاثنين شغالين. First thing, inshallah, the hour you spent today, it's all about how to buy a home. And inshallah, by the time we're finishing here, that you will have clear understanding of the process of how to buy a home, what you need to prepare. Questions we usually get, I don't know if I'm ready, is it ready yet? Inshallah, throughout the webinar today, we'll just go through the process. And from the process, you'll know if you're ready, you're not ready, what you need to do to get ready. خلينا نبدأ. أنا اسمي أحمد بدري, أنا بشتغل مع شركة اسمها بركة مورجج. بركة جزء من شركة كبيرة اسمها Guaranteed Rate. فإن شاء الله يعني benefit إن تجيلك من وجود بركة كجزء من Guaranteed Rate, إن إحنا من برايسنج لسرعة لحاجات كتيرة بنعملها. إن شاء الله يعني you'll get the best out of most work. لو لحد لسه joined, احنا بنكتب بس من السيتي وستيتس منين دخلت, ونكمل. احنا لسه كنا في اول البداية خالص, فبنتكلم على بركة جزء من guaranteed rate. طيب, هي بس هاوس كيبنج. احنا هنا بنتكلم على برنامج اسمه المرابحة, من يعني عبارة عن كوست بلس, فنشرح اكتر يعني ايه مرابحة وايه الفرق ما بينها وبين البنك العادي, ولو في فروق لصالحها وفروق ضدها, فهنتكلم على كل الفروق اللي ليها علاقة بالعقد المرابحة. تمام. أول حاجة, لو ممكن كل واحد, if everyone can just type in a quick word كده, what is the main reason that you join the webinar today? ايه السبب الأساسي اللي انت اشتركت النهارده في الويبينار معانا؟ ممكن بس نكتبهم في الشات. انا يعني مش عايز, I don't want it to be just a one way, I always encourage everyone to interact. ولو you can even send it private or you can send it to everyone, يعني for any specific reason you don't want to send it to everyone, you can just send it private to me. بس يعني to understand يعني everybody's goal here from joining this webinar. شات سهلة, تمام. Understanding what is مرابحة and how it's different from ordinary mortgage, تمام. Anyone else? What is the main reason you joined the webinar today? Okay, alternative finance option. السلام عليكم محمد, لو سمعنا if you understand, لو ممكن نكتب سبب اشتراكك في الويبينار النهارده. طيب تمام, على بال ما كله يكتب, هو ده بالظبط اللي احنا, this is exactly what this webinar is about, is just to explain what is مرابحة, what is the difference between the ordinary مرابحة and ordinary mortgage. ايه سبب الفرق الأساسي ما بين المرابحة والبنك العادي، و alternative financing option. نقدر ندي لك أكتر من option للfinance، و it's up to you يعني to pick the right option. طيب خلينا نخش أكتر. بس يعني housekeeping item قبل ما نبدأ. Just for transparency, cost plus اللي هو المرابحة أو الكوست بلس بروفيت هو بيشتغل بالظبط زي البنك العادي في أوراقه. هنشرحه أكتر. بس الفرق الأساسي فيه هو العقد، إن زي العقد طريقة كتابة العقد هو ده الفرق. الكوست طبعا هنتكلم على الكوست closing cost وكل الديتيلز all the details of the cost and how much it cost you for buying a home. Definitely will cover that. طيب first slide talks about ownership made simple. Everyone is looking for an alternative way of financing, and I always use when someone tells me it's the same thing or something. Well, if it's the same thing and it doesn't cost more, why not? That's kind of like my main rule. If it's the same thing and it doesn't cost you more and it's not more harder, why not? Why not try and give it a chance for the Islamic form finance? Unfortunately, the misconception about the Islamic home finance and how it's more difficult, it's more expensive, it's a lot more stricter. Just like everything else was when they first introduced. But alhamdulillah, it's available, it's competitive to a different banks. We're very, very competitive with normal financing. At any time, you'll find the difference between us and any Bank of America, Chase, Wells Fargo. You'll see that it's not cost more. It doesn't cost more. At the same time, it's not more difficult at all. طيب, Baraka Mortgage uses 100% cost plus financing model with no riba, fixed payments. There's a lot of question about or when they saying it's the same thing. This question or saying it's the same thing, that's they said that قالوا ده بالظبط للرسول عليه الصلاة والسلام من 1500 سنة. قالوا له البيع زي الربا، الاثنين واحد، الاثنين بيجروا نفع، الاثنين they're both the same thing. So why you saying that بيع is halal and riba is haram, even though they're both the exact same? They might get the same benefit, they might get the same profit amount. So why they're different? Quran came and answered that exact question. لما الناس سألوا هو البيع زي الربا، القرآن فسر وقال لا، البيع ممكن يكون شبهه، ممكن يكون كده، إنما هو ده بيع وده ربا. طيب اللي هيفرق الموضوع ايه؟ ايه اللي هيخلي what will make something that's halal and what makes something that is not halal? What makes something halal is basically the contract of how it's written. خلينا ندي we give a little bit of an example. Halal meat, the end result is the same. If you go to a supermarket and look at regular meat and halal meat, they look the same, they taste the same, they get cooked the same, everything is the same. The price might be the same. However, this is halal and this is not halal. And the reason for this is the method that it used to slaughter the meat here is different. Now, the end result came out to be the same, however, the method. So Islam is about how you got there, not the end result, the method of how to get there. And I'm a sheikh, I'm not a sheikh, I'm not a mufti. That's why we have a certified and independent Islamic scholar that certified our program. They gave us the fatwa, they studied the paperwork, they studied the application, they studied the contract. And at the end of after studying all this, they gave us a fatwa. And Unfortunately, there are a lot of people that come in and say, well, yeah, but they said your imam said this, but there's another imam that said this, or another imam that said this. الرسول عليه الصلاة والسلام نهى عن الفتوى فوق الفتوى. يعني you have a fatwa and then somebody certified. I'm a different scholar. If there's a different scholar, have a different opinion. They can say, well, this imam said this, and that's his study. However, my opinion that I have a couple things that is being taken here and there. From across the whole time, there's always been three ways of how you can finance in the Islam. There are three ways. There are maybe others, but the three major ways. It's murabaha, musharaka, and ijara. These are the three main ways that you can finance in Islam. These are the three permissible ways. Murabaha is our program here. It's a cost plus. So you buy an item, you own it, and then you sell it for a profit, and you accept the payment over time. That's Murabaha. The clear example is a car. You buy a car for somebody, you agree the car's price is $1,000. You don't have the whole $1,000. You say, okay, somebody will come and say, two options. I'll give you the $1,000, go buy the car, and you pay me back 1,200. That's haram. If you tell somebody, well, I'll go buy it for you, I'll buy it. So I'm going to buy the car, I'll own it, it's my car. Then I'm going to sell it to you over time. Over 12 months, every month is $1,000. That's halal. Now you're going to pay me back 12,000. It's the same as the other one. So what's the difference? The difference is I bought it and then I sold it to you. Abaya and riba. There's the difference. Now the end result is the same. You still paid $1,200 for the car. You still paid it over 1 year. It's still the same exact cost. However, that's bay'a and that's riba. That's how it's differentiated. At any time, if you have a question, please, either interrupt me, put the question in the chat, and inshallah, I should be able to explain it. So, halal and haram, again, it's something that already been studied, there has been a fatwa, and someone has studied the paperwork. Of course, حكم حكم قلبك أو just always get fatwa from your inside and something that you feel good. But at least you're rest assured there is an Islamic scholar that decided about it and said it's halal, and that's how we do it. There might be a little bit of things from here and there that people are questioning. However, there's someone that does. We'll talk about the other types of Islamic finance, but if anyone has any question, please unmute yourself and ask question directly. Any question? Okay. So if we move from Murabaha to Musharaka, what we call it is a diminishing partnership, where two parties, they agree on buying something together. However, one of the parties put more. So one party will put 80%, the other one will put 20%, and they will buy it together. Now, an example of the house, they don't live together in the house. There's only one person that's living in the house. So at that time, that person will pay what we call rent to the other 80% because he lives in 100%. So you pay rent towards the 80, and that's how the Musharaka company makes money, is by the rent that you pay to use their 80%. And then continuously you'll buy from their 80% until you own it 100%. That's Musharaka. Ijara, it's a lot more simpler, that you agree to rent the house for 30 years, and at the end of the rent period, you just buy it by $1. So that's Murabaha. That's Ijara. So three ways: Murabaha, Musharaka, and Ijara. These are three permissible way of buying a home. Any question about Murabaha, Musharaka, Ijara, the difference between them? Okay.
Actually, I do have a question
Yes.
about the Murabaha. So right now, who owns the home?
You own the home from day one. So we buy the home and we sell it to you at the closing table. So we have a small period of time where we own the home, and then we turn around and sell it to you, and then you pay us back over time, whether it's 15 years, 20 years, 30 years, whatever we agree upon. So you are the owner of the home from day one. You can do whatever you want.
طب سؤال لو حصل موضوع الفولكلوجر هل بيختلف من التراديشنال كونتراكت الكونفنشنال عن الحلال أو البركة؟
Okay, we have a question here from the room. Sorry. So in case of a foreclosure, any unfortunate. So there is an actual fact about Islamic finance. In the past 20 years, probably the cases of foreclosure, and that's what encouraged a lot more investors to invest in Islamic finance. There's less than 0.5% disclosure across the last 20 years. And the reason why, number one, alhamdulillah, a lot of Muslims, they really care about their home, so they pay their debt. That's number one. The second thing is the conventional, the regular bank, they're really not in the business to buy and sell homes. They're in the business to buy and sell money. That's what they really care about. It's really not the home, it's the money. So as soon as they feel like you're not going to be able to pay, they start their legal process. Then they put the home in a foreclosure, they sell it in an auction, whatever money that comes out of it, as long as it satisfies the loan, they will sell it. So for example, you bought a home, you've been paying for the home for 6 years, something wrong happened, you stopped paying, you already built equity in the home. The home price was 400,000. Now the value of the home is 600,000. The mortgage on it, it's only 350. They're going to put it on the auction. If they can sell it for 600, great. But if they don't, they will keep reducing the money. They will sell it for 500. They will sell it for 400. They will sell it for 350. So they don't really care. As long as they get their money, they don't care. So they will just sell it for whatever. However, the reason why there's not too many foreclosure and mortgage in Islamic finance, just because that share the responsibility, for the Islamic contract, that as soon as you tell the Islamic finance company, and that applies to all, not just Barca, all of them that way. As soon as you tell them that, hey, I'm not going to be able to finish, I lost my job, something wrong happened, they will hire for you a real estate agent that will help you to sell your home in the fair market value. The most important thing is to sell it for fair market value. Then, if you have profit, you get the profit. There's no profit. Something you're closer to what the value. You don't have equity, so at least you're not going to end up owning more than what your house is worth. So at that point, they will help you. Now, there's many benefits of this. Number one, that you will get, if you have equity, if you build equity, you put down payment, you should be able to get your money that you invested in the house. That's the first benefit. The second benefit, inshallah, a couple of years down the road, your situation got better, you got a new job, you're ready to buy a house again. Then at that point, you can buy a house again. There's not going to be any issue for you buying because there's no foreclosure. However, if the foreclosure happened, it will be very difficult in the next many, many years until you're able to actually buy a home again. So in the foreclosure event, just if it happened, this is when they really help you to sell the house for the fair market value. Okay, so any other question? Okay, so there's a question.
Please.
Yes.
Yeah, is there any difference between Murabaha or Musharaka or the third option for in the monthly payment, in the total monthly payment, let's say? Is there any difference or
They
all
should
them the same?
exactly be the same. Yeah, they should exactly be the same. You should not be penalized, for going Islamic versus a normal bank. You shouldn't be penalized between selecting multiple. Then one might be, a $20 here, $20 there between the monthly payments, just due to different companies and how they charge. However, they're supposed to be all within, I would say maximum within $100 range between each other. That's the maximum that will be. What determines usually the time when you lock the rate, when you do this, when you do this. We can talk about the exact details, but they're all should be within the same thing. It should not be one more than the other because they all have to follow the standard market rate. And the reason why, because there is an investor that invests in the Islamic finance. And that investor, just like you have the option to go with a mortgage company, a regular bank, and the Islamic home finance, the investor who's investing the money also have the option to invest in the regular Islamic finance or invest. So he should not really getting less money if he invested in Islamic finance versus regular finance. And you shouldn't be paying more when you decide to go with Islamic finance than the regular finance. So لا ضرر ولا ضرار. القاعدة الفقهية الأساسية لا ضرر ولا ضرار. ولا انت تتضرر ان انت رحت الاسلامك فاينانس ولا المستثمر نفسه يتضرر ان هو عمل انفستمنت في اسلامك فاينانس.
وانا تحديدا كان سؤالي على الخيارات الاسلاميه، مش الخيارات
لا،
مش.
الخيارات الاسلاميه الاثنين هيكونوا تقريبا، يعني الثلاثه المفروض على حسب طبعا الشركه من هنا لهنا، بس تقريبا الثلاثه المفروض يكونوا كلهم زي بعض. المبلغ النهائي اللي اتدفع للبيت تقريبا هيبقى واحد في الثلاثه، سواء المرابحه سواء الاجاره او سواء كده. السؤال دايما بيجي هو انا لو خلصت بدري هل الثلاثه هيبقوا زي بعض؟ الثلاثه هيبقوا زي بعض، لان كل واحد بيكتفي بالربح بتاعه في المده اللي كنت فيها في العقد. يعني if the contract is 30 years and you decided to sell after 5, at that point they already made profit over the 5 years. Nobody will ask you for a profit that for the remaining 25 years. It's only what you already paid, that's what they get as a profit. الفرق بسعر بيع البيت ده هيبقى your profit.
Thank you.
Okay. Does Baraka work with any seller, realtors, and any limitation of who purchased the house from? There's no limitations. You can go with any real estate agent, any seller of the home if you want to go buy new construction. By the way, we do have connection with new construction builders that give you money towards your buy. So, for example, there's First Texas Home. They give us $25,000 towards closing. So, if you ever buy a home from First Texas Home, they're all over Texas. They're all over Dallas and Houston and Austin. If you decide to buy with them, we have a deal with them. They give you $25,000 towards closing. If you decide to go with a trophy home, there's trophy homes. They also trophy homes. They give you between $10,000 to $20,000, depend on the house, towards closing. These are all amount that they can help you towards the closing cost. How to waive the down payment? في سؤال كان earlier. I'm planning to buy a home in about 1 year. I need to know how to waive process, and for first-time home buyer to waive down payment. There is no waiving of the down payment. Down payment is used to reduce your monthly payment. Just the standard without like many different programs. The minimum it's 5%. This is the minimum down payment. It's not 20, it's not 10. There's a lot of misconception about Islamic home finance. You have to have 20% down. It's only 5%. This is mainly the minimum. There's programs that go down to 3.5%. It kind of depends on a lot of things, but we can discuss it on the case by case. But for now, the minimum standard is 5% down payment. So for a house that is $300,000, the minimum down payment will be $300,000. The minimum payment is $15,000 for a $300,000 home. There's no there's no specific seller or real estate agent that we're limited. You can buy the house from anybody you want. We don't. Okay, so just the home buying process. Here's the process. The first thing that we do assess your financing. We review your credit, we review the amount that you have, your savings, and affordability. For some people, it doesn't mean that you have good credit, that's good, that you can buy a car. So the score itself, we're going to talk a little bit about the score, but the credit score itself is not the determining factor. The determining factor is what's in the credit. What is your payment history? Sometimes the low score happens because you had something way back in the past. Might be because you have some high credit limits. I only have two credit cards, but they're like near the limit, or their limits are small, or my credit is new, that's why the score is not high. I only have credit cards for 2 years only. So as long as that's why we have to do the assessment, assess the financing to find out exactly what is it that we need to do, and there is just to the most important thing is we need from here what is the just to understand everybody and how they're thinking, what is the scariest thing that you have from buying a home? Yani, if there's one thing that really preventing you right now from buying a home, what do you can name that and say that this is the top reason why I'm not looking at buying a home right now? Can you tell me that on the chat? What is the main reason that that's blocking you or worry? The down payment, okay. Anything else? How about income? Do you have clarity about how we calculate income and what is the relationship between your income and the price of the house? How we calculate? Do you know how to calculate low income? Okay. Monthly payment. Okay. The down payment, low income, monthly payment. Anything else? Okay. So that's exactly what we try to clarify. Okay, if the market crashes, I'm stuck with a high payment. Okay, income calculators. Okay. طيب خلينا let's talk about one by one. So down payment, I think we clarified a little bit. The minimum is 5. Case by case, we can go down to 3.5, but we just have to assess the actual situation. But mainly, it's 5% down. That's the minimum. Then low income. So income is definitely one of the most important. Sometimes it's even more important than credit because it values how you can actually calculate. So how we calculate income and what is the income relationship with the credit? Usually, in a standard way, your income, it depends on if you're a self-employed or if you are a W-2. Can you drop it in the way if you're a W-2 or self-employed? Because they're a little bit different of how we calculate income on a W-2 and self-employed. So W-2, 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 W-2. Okay. Okay. So for W-2 is easy. We look at the income on the monthly income before taxes. So for example, you get paid twice a month, or you get paid every 2 weeks, you get paid every week. We take that amount and we multiply it. So if you get paid every 2 weeks, we multiply by the 26 and divide it by 12. If you get paid every week, we multiply that by 52 and divide it by 12. We want to get the monthly income before taxes. So we calculate the monthly income before taxes. And then we look at the other things that on your credit, how much other payments you're making. So if you have a car payment, if you have credit card minimum payments, we look at these things and we deduct it first from your income. And then we will say that your house payment should not increase or should not be more than, on an average, 45% of your income. So the house monthly payment should not be more than an average 45. In some cases, it goes up to 50%. However, to be on the safe side, we try to be around 45% of the monthly payment. So 45% is mainly the percentage. So if your home, if your monthly payment, let's say if you make $10,000 a month, the monthly payment should not be more than $4,500. If you make $5,000 a month, the payment should not be increased more than $2,250 per month. That's the monthly payment. Then we will go through how we calculate the monthly payment, but just as just an average, how we relate between on a W-2, what the relationship, how we calculate between your income and the house payment that you should be making. Okay. So we're gonna say where we're gonna get from the income, but let's go through. So we assess your financing, that's the first step. Then we get you pre-approved. So we have a same-day pre-approval process where you complete what we call a pre-approval application. The most important thing about the pre-approval application, it doesn't impact your credit. So zero impact your credit, no impact. So your credit is not impacted. There is no ding. There's no reducing in the credit points. Nothing. It's the pre-qualification pre-approval is 100% safe on your credit. It doesn't impact. What we do is just take a snapshot of your credit. We call it soft pull, and the soft pull does not impact your credit at all. So we just take a look at your financing, and at that point we say, okay, based on your income, based on the soft pull that we have, and based on the down payment you are planning to make, this is how much house that you can afford. So if I'm planning to buy within the next 6 months, if I'm planning to buy in a year, if I'm planning to buy in 2 years from now, it doesn't matter. I want to know now if I can, how much I can afford, what I need to do, what I need to fix in order for me to either afford more or buy more home or whatever I want to do. So I just want to make sure that, because buying a home is not a tomorrow decision. It's not next month's decision. It's always people plan to buy a home and it take them, 3, 4 months, 6 months, sometimes a year to prepare. So if I'm buying after a year, why do I need to get pre-approved now? In order for me to fix, maybe there's a small collection on my credit card that's causing my score to drop by 20 points or 30 points. Well, it's better to pay off this collection and get my score up. It will take it a couple months to get the score up. So it's better to know about it now, and I know it's impacting me. So I just pay it off. That way, I can, if I can pay it now, at that point, I can fix my credit and get it back up. So the most important thing is, let's get pre-approved, pre-qualified right now. If I need to save more money, because sometimes, a few thousand more can make you afford $100,000 more house. So I know now if I'm buying within the next 6 months, I need to save $5,000 more. So I know for now. For example, the income, well, if I'm making a certain amount right now, in order for me to afford this house I'm looking for, I need to get my income up by this much. Well, should I have a part-time job? Should I get, I can switch job and get a better job with a higher income? But planning, that's why, some people, when we say, let's get pre-approved, no, I'm not buying for the next year. That's okay. Well, how long the pre-approval is good for? Mainly the pre-approval is good for 3 months. However, as long as things doesn't change, your pre-approval is still valid. Even if it's expired, we would just need to rerun it again. As long as there's no more changes, still doesn't impact your credit, we can run it again. So it's better to know now what I'm missing and what I need to prepare, even if I'm buying in the next year. That's the idea about getting pre-approved. Then once you get pre-approved and you have a letter in your hand that says you're pre-approved for this amount, then you go find the house. Like, the most important thing is to have the step of the pre-approval before the search. Why? Because you don't want to go look at $600,000 home and your income only support $500,000. Or you limit yourself with a $300,000 home, even though your income can afford $400,000. So it's better to know from this step, which is the pre-approval step, how much I really can afford. That's the reason why we should get pre-approved before we start the search. The home search, that's where you get involved with a real estate agent and he goes with you. One thing about real estate agents, I really wanted to highlight this. Real estate agent is your agent. Don't get misled by, oh, if you don't have a real estate agent and it's one agent, so you can get better pricing. No. You can get a better deal if the seller knows that you don't have a real estate agent, so he knows he can save 3%. He'll give you those 3% for you and you'll save. No, don't do that. Real estate agent get their commission from the seller, not from you. So it's zero cost. Real estate agent gets zero cost on you. Even though some real estate agent, they also help you a little bit. So they give you a little bit of their commission here and there. Some of them do that. But I'd rather, personally, Ahmed, I'd rather work with a very strong real estate agent. He will keep all his commission and help me get, $20,000, $30,000 off the price of the house. Then go with a mediocre or, not experienced real estate agent. He will say, well, my commission is 3%. I'll give you 2%. I'll just take 1% and I'm okay. This is a guy that just want to make a commission, 1% of the house, and that he doesn't really care. He just want the deal to happen. And so I don't really suggest or recommend the real estate agents who give up all their commission or give up a lot of their commission, so just to make the sale. If they know you and they're friends and he's willingly to give you a little bit, I'll go with him. But really, the real estate agents who just give up their commission just to, they want to make a 1% or 1.5% or something like that, because they don't make the money from you, they make it from the seller. At that point, they're really not that good. They're not a good real estate agent. So I don't recommend them. So you will work with a real estate agent to buy the home. And then once you find the home, you sign a contract, you do the negotiation, and then you do the financing. We come back and we'll finish up all the financing activity. Then the closing happens, and then you close, and we can close as low as 10 days. But the average closing time is usually about a month. So from the time you find a home and sign the contract to the time that you actually close and get the keys is usually about a month from there. So you calculate. We'll go through some mistakes of how to do, but through the process right here, I want to make sure that if anyone have any question that we can answer. Any question? I know I said a lot of information, so we want to make sure it's interactive. So if you have any question, please let me know. No question?
What are closing costs and how much of a percentage are they compared to the down payment?
Closing cost, just in general, I would say the closing cost is divided into two things. There are things that we can change, and there are things that you cannot change. The things that you cannot change is the title information. So the title company that handles the title work, they have standard changes. So it doesn't matter what finance company you go with, the title stuff is the same. They call it title insurance. There's title fees, there's legal fees. These are probably the fees that you cannot change. Doesn't matter what finance company you go with, they're going to be fees. Now, finance companies, they charge something called the origination fee. So every company is a little bit different. So our company, they charge $1,740, the $1,740. Some companies, they charge by the percentage of the amount financed. They call it points. So it depends on the finance company, but at the end, they're almost going to be around the same. So these are the things that you can change a little bit based on the different title company you select and different mortgage company you go with. These can be a little bit changed. But this is only, maybe third of the closing cost. The majority of the closing cost is what we call prepaids. And these are things that you cannot avoid, and it doesn't matter what insurance company you go with. These prepaids you have to do. What's a prepaid? Prepaid is the amount you have to pay 1 year insurance in advance. So that has to be part of the closing cost. 1 year full insurance. So if the insurance policy is $2,000, if the insurance company, the insurance policy is $3,000, it's going to have to be paid 100%. Give me 1 second. Okay, so we said regarding the insurance, so insurance cost for 1 year, you have to pay that upfront. The taxes, it depends on what time is it in the year, how many months of taxes still remaining to pay. It will be paid also upfront. So If the tax year is still 3 months ahead, you will pay the 3 months. If it's 4 months, 4 months, 5 months, how we know it's going to be the title company will decide how much is the insurance that you will pay upfront. So these are the two things. Sometimes there's another thing called the reserves. The reserves are funds that you're not going to pay. You're not going to pay anybody those reserves. But just because of the certain credit situation, certain income situation, the finance company will say you have to have 3 months reserve or 2 months reserve or 4 months. This is amount of money that you should be having in the bank on top of the down payment and the closing cost, and you're not going to pay it, but they want to see that it's there. A good example of reserves, you can use your 401k as reserves. You can use it. You can use a CD, stocks, anything that's in the bank, and even if you're not going to liquidate it, that can be considered as reserves. And it's good to show that you have reserves that give you a better chances of getting approved, just in case if there's a little bit issue with credit, a little bit this. If we show that you have reserves, what reserves mean that in case that something happened with your job, you have something that you can sell or liquidate in order to make your payments. So that's what the reserve. So I know we talked a lot. So let's talk about closing cost. Closing cost on an average, I will say between 2 to 3%, 2 to 3 to 4%. It depends on, again, these prepaids, any of that. But we can say that. Okay, so we are right now in what we call a buyer's market. And it might change down the road if the interest rates start going up and going down. What will happen is there'll start to be a little bit of a seller market. So is it a good time to buy now when the rates are high versus I should wait until the rate goes down? Honest answer, when the rate is down, everybody's buying. And then the demand is high. The supply goes low. What happens when the demand is high and the supply is low? The prices of the house goes up. So for you to save 0.25% or 0.5% in the payment, it will cost you $20,000, $30,000 more in the house. So what I should do right now is if I found a house that I can negotiate $20,000, $30,000 of the price of the house, just because this house been in the market for 100 days, 3 months, 4 months, the house in the market, nobody's buying, but I love it. I like it. They might not be, they might not have the right school, or it might not be, somebody just doesn't like this area, whatever. But the house been sitting on the market for 100 days. At that point, I can go in, negotiate. I save $30,000, $40,000 of the price of the house with 0.5 point, maybe the percentage a little bit higher. It's okay. I'll use that $20,000, $30,000. I'll save it. And then when the rate goes down, I can do refinance. So now I got the best of both worlds. I got the good price upfront because I caught in the time where demand is low and the supply is, there's many houses for sale. So I went in, I negotiated, I got a good deal on the house. I saved $20,000, $30,000. Then when the rate goes down, I'll just do a refinance. And at that point, I got the benefits of the good price. And when the rate goes down, I'll refinance. So I'll be on that high rate for just 6 months or maybe a year. And then once the rate goes down, I'll just do a refinance. So that's why I really don't care much about the rate. When I'm buying a house, I care a lot more on saving as much as I can, because the price of the house is never going to change. You paid for it and done. There's no, you cannot renegotiate the price of the house once you buy the house. It's done. But what can change is the price of the house. Yes, we can do refinance. That's the question. So there's another thing about also when it's a buyer's market like this. The buyer is in control. What do you mean by in control? You go in the house and you like it, price is okay. The guy said, well, I can't really, this is the lowest, I'm not going to be able. Okay, well, I really don't like the appliance. Can you change the stove for me? Can you change the refrigerator? Oh, I don't like the floor. Can you replace the floor? Oh, I don't like the paint. Can you repaint it for me? Oh, I don't like, can you replace the roof on your insurance? So there is a lot of leverage, a lot of negotiation. That's why I was saying you should have really a good real estate agent that will negotiate for you. Because with these things, you will be able to get a good deal when it's a buyer's market. As soon as it turned to be a seller market, yeah, late rates are low, everybody's buying, house prices are good, the market is good. At that point, the seller will be coming in just, as soon as he put the offer, the house for sale, 2 days later, he sold the house. You submit an offer, they were like, oh, sorry, somebody already, well, what if I give you $10,000 more? And then somebody comes in, what if I give you 20,000? And that what happened during Corona time. People are paying 50, 60, $100,000 above the asking price just to be able to get the house. And it was definitely a seller market. And the seller is like, well, it is what it is. You like it, you don't like it. I have two other offers waiting for me. So it's a different way of looking at this, and it's much bigger problem, bigger impact on the overall price of the house versus the rate. How much percentage of the price is the Murabaha or the Musharaka or alternative? Does the 45% limit include the home insurance? Yes. So the 45% limit includes everything, even if your other payments too. So it includes, if you have a car payment, if you have a credit card payments, if you have anything that you pay, other loans, anything that is you pay on an installment, your total debt to income ratio should be on average of 45%. I said on some cases we can go to 50, but on an average it's 45%. The percentage of the price in the Murabaha. I don't understand that one. Can you tell me more? What is the percentage of the price in the Murabaha?
Yeah, I mean that if I get a conventional loan from the bank, let's say it's going to be 4% APR.
Yes.
Right.
Yes.
That's interest. If I want to go for Murabaha or Musharaka, how much is going to be the equivalent, percentage?
It's the
Like
same.
a
The
300,000,
same market rate.
the same, I'm
The
sorry?
same market rate. Yeah, the same market rate. Whatever the market rate at the time, the average market rate, it's going to be, the same as. So if you compare us between us and Bank of America or Chase or something on any given day, will be probably the same. Maybe a little bit less, maybe a little bit more,
It's
but on
competitive.
average, it's about the same.
Mhm.
Yes, because again, the reason why it's that way, it's القاعدة الشرعية تاني لا ضرر ولا ضرار. I shouldn't be penalized as an investor to invest in Islamic finance versus non-Islamic finance. I should be getting the same rewards. The same thing as you as a consumer, you shouldn't really paying more if you're getting Islamic finance versus a regular finance. The whole time before, yeah, you should sacrifice because you're getting Islamic, you should pay more. We justify we're more because we're Islamic, and no, this is not more. Right now, Islamic finance, it's the same as how much impact to your pocket is about the same as any other bank out there. The it's you know uh, the way they calculate it right now, it's market rate. We are part of a company called rate.com. If you look up, there's rate.com. Rate, if you see, just type in Google how much mortgage rate.com did last year, how much mortgage they financed. If you look at how much rate.com financed last year, this is our mother company, I would say close to about 30 to 40 billion dollar. They average about $3 billion per month. Every month, $3 billion in financing across the whole US. So their appetite to accept a little bit less profit per deal is higher than a company that if the whole company is making about $1 billion per year. Their tolerance to calculating profit is usually higher when you just make 1 billion per year versus a company that makes $3 and $40 billion in mortgage financing per year. So that's why it's good to deal with a large company. The second thing is they have a little bit better risk calculation. So they're willing to accept deals that other company might not accept. Their tolerance to accepting risk is higher. So that's why it's good to deal with a large mortgage company because they're, just like anything, if you go to Costco and this, you might find less prices that you find on the smaller supermarket down the street. The reason why these guys are spreading their profit a lot across a lot of products versus just having a couple products. So they want to make the most to pay their fees. So yeah, that's how we calculate it. We don't charge any additional, LLC fee. There's really nothing that you pay additional than any other mortgage company or non-Islamic bank, any additional fees because it's Islamic. None of that. It's the exact same thing. And that's why, because we're part of RATE, so RATE cannot charge more for an Islamic product where it doesn't do it for a non-Islamic product because it's the same customer. So if I'm getting a customer who wants my Baraka product, which is inside RATE, it's going to be the same charge if they're both are the same thing. If there's the same credit score, same income person, same price of the house, they both should be getting the same exact price, the same exact rate. I'm not going to charge one person higher because he's going with the Islamic finance versus the non-Islamic. So it's the same thing. They don't charge more because it's the same qualification, same guidelines between both. So why do I charge somebody more just because he decided to go with Islamic finance? Even in a way, we try to convince them it should be less because the risk is less. But until we really prove them that we're the risk is less, they're still going to calculate it the same. Otherwise, inshallah, but the more and more that we get Islamic finance, they will see that it's actually less risk to do Islamic finance versus non-Islamic. All right, so going to the next one. So again, so we're trying to do same day approval. So we have what we call, sometimes we have especially for W2. We have same day approval. So you fill the application, you submit your W2s. If you have a bank account, you submit your bank statement. You submit, like just in case if you have, we're on your credits and soft pull, you can get approval on the same day. That's how quickly most of our approval is done automatic by the system, not a human being. There's a lot of AI and the difference. You can apply, get approved, and get a pre-approval letter before I even see the file, before I even see it. It's by the time I get the notification, the same time you're getting a notification that you've been already pre-approved. Same, I get a notification, hey, your customer applied and he's pre-approval, here's his pre. So it's that quick. Sometimes I get the same time notification as you get when you fill the application. It will tell you right away. And sometimes it will say, well, we need to do a little bit more calculation. At that point, they're just waiting for me to verify something until you issue the pre-approval. So it's usually a very, very quick process. I would say an hour or two maximum to get a pre-approval. Closing in 10 days. If you have all our documents before we submit, and our bank statements are updated, our pay stubs are updated, we have the contract, the seller has all his paperwork, the title company send us everything on time, we can close as low as 10 days. Right. Next one is how it works. Like we said, it's it's our cost plus model. This is our models, Murabaha. We definitely have certified document. So we have our fatwa available. So if anybody wants to to have a fatwa, okay, okay, yeah. Home assistant programs, they're available. It depends on the area where you. Usually, home assistant programs are done in, I would say, I don't want to say low income areas, but in areas that the income is kind of below, or the majority of the people below the median income. So government. So for example, there's a program in Dallas City. There's a program in Tarrant County. So if you're buying a home in Tarrant County, there's programs in Tarrant County. There's program in Fort Worth. Unfortunately, there's no programs in Collin County that I know of. Collin County is very, very high in demand, and there really no much. But if you're buying a home in Fort Worth, I think they have like $25,000. I would say these programs are good. We accept it. We can do it. The only thing is, or sometimes the seller doesn't like it. Like because they take a little bit long time to get. So by the time we approve the deal, usually I would say 2 weeks. Then we get the package, we prepare the whole package and get everything from the title company. We get the full approval package, and then we send the whole thing to the county. Then the county have to do their own processing at that point, and they have to inspect the home. They have to do a lot of things in it, and sometimes it takes a long time. Sometimes a month, sometimes 2 months. The issue with these programs, normally sellers, they don't like to wait. They don't want to wait 3 months for the home, like to put the home on hold for 3 months and not knowing are you going to get accepted for this program or not. So the way I do it is I would say let's get pre-approved based on your income right now and the amount that you can actually get as a down payment. Just do it. And then in case we are able to get the program going and you get approved for the program and they can give you the money, at that time, it's okay. Let's take the money, let's do it. But don't bank on having that government assistance programs as your kind of like, if they don't give it to me, I can't buy the house. I would say, no, you shouldn't really be doing that. At least you have your 5%. If you're able to get the $25,000, the $30,000 from them, great. That will be great. And you can use that towards your down payment. Otherwise, you should be able to at least get your own funds without them getting involved. So it will just give the seller assurance, because a lot of sellers, when you put in your contract, when you make the contract, that you're going to use the down payment system programs, most of the time they don't like it. They will rather, unless they don't have any other offers, but they will take an offer that doesn't have the DPA versus the offer that has a DPA. This is just from experience, but the programs are approved with us. We can do is the down payment assistance programs. They're okay. All right. Moving on. Any question? Any other question? I don't want to continue to be talking, but any question that anyone has? Okay. So cost plus 10 days to close, 100% financing. Okay. Let's take a look at a little bit of what it matters. So credits, that's how we kind of look at a credit. However, again, the number itself, it has an indication, but most of the time I look beyond the numbers. So I can have someone who's in the 640, 650. However, he has a good credit, great credit, never missed a payment. His credit is perfect. So I'm going to look at his 640 and say, yes, it's no issues. Sometimes I have a 720, but with some issues in the back that can prevent him from buying or getting a high, rate or something like that. So, being in this area, this is most of my customers is within this area between 670 and 740. That's really the median average credit that we've seen are in this area right here. There's outliers here and here. Now, if your credit's on here, right, and if anybody's credit is 580 to 660, we want to know why. Why it's that. It might be we have our credit tool that we use that says why your score is low, and will give us suggestion and say if you do 1, 2, 3, it will take your credit score from 620 to 680. If you just do those two things, or if you pay those couple credit cards, if you clear this collection, your score will jump by 40 points, 30. It will tell us exactly how many points. If you do something, how many points it will take it up. Now, let's say you have a collection, okay, for $200 that is causing your score to drop by 30 points. I'm going to tell you, pay this $200, give me a letter that says you paid it. I'm going to take that letter from you, and then automatically in my system, I will fix the points. I will fix the score. So I'm not going to wait until the score reflects in the bureau. I'm not going to wait 2 or 3 months until Experian and TransUnion reflect on their system. I'm not going to wait. I'm just going to get the letter from you and automatically do something that we call automatic rescoring, and then automatically rescore based on that letter that this amount is now gone and is paid off. So, but I just have to get that letter from you. If you work overseas, can you buy a house in the state through an Islamic finance? Now, if you work overseas, that means a lot of things. The husband can be working in Saudi Arabia, but the family lived in the US. You can buy a house in the US, even though the income and the main source of income is overseas. If the full family is overseas, can they buy a home here? Yes, but it cannot be primary residence because they don't live here. It can be an investment property, it can be a rental, it can be a second home, but it cannot be your first primary residency because you basically don't live here. Is that your question? If you work overseas? I just want to make sure that I understand the question correctly. Okay. Yes. Okay. All right. So yes. So yes, you can, as long as the income is verifiable. We can verify the income, and we can get like an HR letter or income statement that shows how much money that you make per month. And as long as the family lives here, even though the main source of income is from overseas, very important too that you pay taxes. You file taxes. You don't have to pay taxes, but at least you file taxes in the US. That's also important. If you work overseas, it's important that to file. Even if they'll say, sometimes they say the first 100,000 or the first 150, I'm not sure about exactly the number, but they say, if you work overseas, the first 150, no taxes. Okay. As long as you file, and even if it says zero taxes, but you just have to file your taxes, even if you work overseas. Okay, so any question about the credit score? Any question about how we look at credit score, how we fix credit scores? If there's any issue, we fix it. Okay. All right, so we check your score. You can actually check your score. This is annualcreditreport.com. Make sure it's the exact spelling like this. If you ever go to that website, it can tell you. It's not going to give you a score, but it's just going to tell you what's in your credit. If you have any bank app, usually bank apps can give you a score. Most of the times, they're different than how we calculate score. So sometimes I get the customer to say, it said 680 on my bank app, you showing 620, or it's saying 720 on the bank app and you showing 700. So what we do is we get the 3 score just to make sure. We get the 3 scores and we take the middle score. That's the score that we go by, the middle score of the 3. So we look at the 3 scores and we take the middle score. Okay, so how you can boost your score? What is the quick things that you can do that can fix your score? You pay down balances. If you have balance on your credit card, try to pay it down. Try to not to carry more than 25% to 30%. From month to month. Okay, so we're going to talk about this mistakes, but try to limit the new credit lines. Don't get new credit. If you're in the process, if you're buying the house in the next year, try not to get new credit cards. All these, if you open the credit card with us, we'll give you 1 year of no interest. These furniture stores, these, whatever, department stores. So if you're planning to buy a house for the next year, try to avoid getting new credit cards or new things. Even if you're going to pay it off and it's going to be zero balance, just by having that additional credit, it lowers your score. It will eventually come back up again, but you will take a hit. Any errors or anything that you see on your credit score, try to dispute it and get it cleared before applying for a home. So that's kind of things that you can do to boost your score. Okay, again, we said how we calculate our purchase power. How much house can I afford? I wanna know how much house I can afford. So let's see how we calculate it. I'll give you a rule of thumb, just a simple thing to calculate, right? And just if you want to write this down, every $100,000 financed. So let's say the house is 600,000, but you're paying down 200 and you're only financing 4. So now we're just talking about the amount financed. So that's why it doesn't matter how much down payment you pay. We're talking about the amount financed. Every $100,000 of the amount financed equal about $800 in payment. Again, so if I'm buying a $300,000 home and I'm paying $100,000 down, so I'm only financing 200. So that means it's $800 about. This is not a real, like this is not a firm calculation, but I just want to put in my head how much house I really can afford or I want to buy, or how much house. So I'll say, okay, well, I'm looking at a $400,000 house. I'm gonna put down 100,000, so now I'm financing 300,000. Or I'm looking at a $325,000 house. I'm gonna put down 25,000 and I'm gonna finance 300,000. So now the amount financed is $300,000, right? So out of my rule of thumb, $300,000, every 100,000 is 800. So I multiply 800 by 3, which is going to be about $2,400. That's including taxes, insurance, whatever total this is your total house payment is about $2,400. So this is something just to put in your head when you start kind of saving or calculating or something, that every $100,000 is about $800 in payments. Any question about this? Anyone have any question about this? Is it clear? Do you understand that part? You don't have to, you don't have to give me a number, but is everyone, know their average credit score is? What your average credit score was up? Definitely, I don't want you to type it, but do you check it? Do you know your credit score? Everyone is aware of that number? Okay, right. All right. Everybody else, just aware. If you don't want to put the score itself, you don't have to. But I just want to make sure that everybody at least knows a way of how to check their credit score. Yes, no, maybe. Yep. Okay. Okay. You know how to check. This is Mahmoud. Do you know how to check your credit score? Do you know your average credit score? Yes, no, maybe. Okay. So it's just a good exercise just to get an average and know why. The most important thing about, credit score, if you get your score, we want to know why. Why is 650? Why is 640? Why is 720? Why? What's in it that is causing the score to go up and down. So to calculate your purchase power, we understand now how it works with the income, right? 45% total monthly income, total monthly payment out of your total income, and we calculated how to get your income. Now, if you're getting income from anything, any other source, that's also calculated. There's a way. Oh, okay, no problem. Yeah, we will share the recording. Yes, I'll make sure to share a recording with everyone. So gross monthly payment that we can calculate that. Down payment, you know how much you want to put down. Like we said, 5%, 3.5% in certain time, but in an average about 5% down. And if you ever go to rate.com, that's our website, there's a way that you can actually have a calculator on there. Or you can do a pre-approval. Of course, that will give you the exact amount. If you have any other debts, student loans, another car payment, credit cards, all these can impact your purchase power. All right, just a little bit comparison between, the difference, 10 years, 15, 20 years, 30 years, all these terms are available. 10 years if somebody will just want to finish, and build equity quicker, do you want to finish? But this is definitely very high monthly payments. 30 years, this is the lowest amount of monthly payment that you can get. And, that's if you have a little bit of a, cash flow, income is to them. So we recommend. Now, does anybody really pay mortgage for 30 years? Yet I've been doing mortgage. I started doing mortgage maybe 2004. I started our work for guidance from 2004 to 2007. Since that time, I never seen anybody that pay their mortgage in 30 years. It doesn't happen, you know. Either, you know, something will change in your family situation and you'll end up, you know, buying another house, so you'll pay off the home early, you know, and just buy another home or move to another state or something. That's one situation. Or the rates goes down, so you do a refinance, or you take another whatever. But nobody, you know, you pay off. You know, some people will take the 30 years, but they have every month, you know, $500 extra, $300 extra. They pay towards their mortgage. That way, they will finish in a lot less. They will maybe finish in 20. Sometimes we have a system in our tools that we put you, once you finance with us, we put an alert in the system. What this alert will give me, at any time your payment for a lower term is equal to your payment now, it triggers it. What does that mean? If your payment at 30 years, let's say, for example, your payment is $2,000 a month for 30 years. And then if we ever calculated the 20-year payment, the 20-year payment is about 2,500 or 2,600. At that time, what we will say is, I'll put a trigger in a system that after 6 months, after 8 months, after a year, at any time your 20-year payment equal to your 30 years income, because the rate went down, your build equity on your home, the rate goes down, at any time the system will trigger that your 20 years payment is going to be equal to your 30 years payment. I'll call you right away, come in, do a refinance. You don't pay anything out of your pocket. Everything is built in, and your payment for 20 is equal than your payment for 30. That means you saved almost, if you've been doing it for a year, now you almost shoved 9 years out of your mortgage just by one alert. Same thing with 15 years. If it happens again, and we've seen the rate for the 15 years is close to the payment, the rate for 20, we come and say, hey, come do a refinance. Here's another 5 years shoved of the mortgage, and the 10 years and so on. So with a little bit of help and, you know, going back and forth, and the market help us, and then the rate goes up and the rate goes down, and a little bit of help, you can finish your mortgage in 10 years easy. There is really no one that stays in the mortgage for 30 years. I never seen it. It's not possible. You know, the bank really want you to wait for 30 years because they will make their most money, but at the same time, they will, you know, they will definitely accept. There's no prepayment penalty. There's nothing that if you pay early, pay more, nothing like this. So there's always a help, you know, going on, and things are changing. And we're in the market right now. We're expecting rates in the next 6 months to a year to kind of start going down. So that's basically okay. So that's about the terms and the rates, and, you know, how we will stay with this. All right, saving for your down payment. If you, like we said, we have somebody that says, I'm buying the home. I'm waiting, you know, I'm going to buy a home in the next year. I'm buying a home within the next 6 months. This is a time right now to calculate what's your goal, how much down payment you want to put. And you say, okay, well, every month from now on going on, I'm going to save $500 towards my down payment. So I'm going to save $300. I'm going to save $1,000, and then continue to save that until the time that you're ready to buy. So start, set some clear goals on how you buy, you know, you need to buy, and then try to have a dedicated account. This is my down payment saving account. I'm not going to touch it. You know, I'm not going to do anything with it, or, you know, but 100%, this is like one of the huge mistakes. Do not keep the money at home. Keep the money in the bank. Maybe make a separate account for it, but don't keep the money. I'm going to save at home because I don't want to touch it. I don't want to do anything. I'm going to leave it at home. And when it's time to put the down payment, I'll go deposit the cash. Nah, zero. You can't do that. It's a huge mistake, right? So keep the money in the bank. However, you know, if you want, put it in a separate account and keep it in that separate account, and make a commitment to yourself that every month from my check, I'm going to take $1,000, put it aside towards my down payments. And then, you know, calculate it that way and set a goal and have a dedicated account. And also try to, you know, if you can, just make it, you know, automatic recurrent payment. So, you know, automatically set that every month from this account to this account, I'm going to transfer 500. I'm going to transfer 1,000 just without me doing anything, just automatic recurrence that happens, and I just save money towards my account. So try to have some goals, open a dedicated account, and have some automatic deposits of that account. Now, just the mortgage process itself, like I said, to do a pre-qualification, we can do, the application is online. It's very quick, usually about 20 minutes. Just ask you a basic question, just like you're opening a credit card. There are really nothing that will prevent you from just no. It's a soft pull, like I said. There is nothing that prevents or impacts you at all. So go ahead and if you want, we can drop the application link on here. So if you applied, there really nothing will impact your credit. There's no obligations. You don't commit to anything. If you do a pre-approval and you decided, oh no, I'm gonna wait 6 months, I'm gonna wait a year. Really, nothing is obligating to you to do anything after you do a pre-approval. It's yours. You want to use it, use it. You don't want to use it, you don't want to use it. Nothing is paid for, nothing. Get the letter, and you can, when you have a letter, it's a lot more power. Now the real estate agent is motivated to get you a home because you have a letter. The seller, if you ever negotiated or trying to put an offer on a home, if you have a pre-approval letter, it makes your offer a lot stronger than an offer. Sometimes sellers doesn't even accept your offer if you don't have a pre-approval. So just a step to get that. Try to have your, of course, government ID, because we need the information from it. We don't ask you to send the government ID, but just some information from it. Most recent pay stub. If you paid monthly, so it's 2 months. If you paid, every 2 weeks, so just the last 2 stubs. Bank statements, usually 2 statements. If you have 3, great. Most of the times we do it online, so whatever bank statements. So we just want to make sure that the money in the bank. If you're self-employed, we need your tax return. But if you're W-2, we don't need a tax return. Just W-2s are fine. And then we will do employment verification. This is usually done automatically. They don't call anybody. They don't call your job. They don't do anything. The employment verification is done automatically. It's just something that once you do it, they do it automatically. There's no calling. They don't call the actual employer. Okay, so financing, like we said, we talked already about the Murabaha part and the benefits of going the Murabaha part versus regular financing. Fixed payments, that's important. Even though there's some programs that are fixed as well in the regular bank, but there are variable payment. Don't do those. Those are not good. Do not do variable payments. So fixed payment is the most important thing. Make sure that there is really no hidden fees, because sometimes there are hidden fees. All right, so we'll proof of income. We'll get your pay stubs. We'll get your bank statements. We upload everything securely into the system, or you can email it to me, or you can upload it directly into the system. In your application, there's going to be places where you can just upload your documents, upload your bank statements, upload your pay stubs, upload your W-2s. Everything can be uploaded directly. Once you upload all this, you automatically get the pre-approval, sometimes without me even getting involved. All right, so here's some check items that you do. We'll send you this. So your credit score reviewed, check your credit score. You get your pre-approval. We have the scholar approval. We check the budgets and how we calculate that. You submit your pre-approval. You get a pre-approval. You found the home and make an offer. Then you do the actual financing, and then all your documents submitted. Submit the closing. Then your key is going to be in hand. That's how the mortgage process in a very quick way. Now, let's talk about these mistakes. So very, very important. These are, if you planning to buy a home between now and then the end of the year, from now until next year, same time. Doesn't matter when you buying a home, there's things that you should not do while you're preparing to do a home. So number one, don't go try to shop without having a pre-approval. Don't do it. Sometimes it's, even mentally, you go to a home and you love it, and the family and the kids, yeah, that's the right home. We want it. We love it. The right rooms, right bathrooms, right backyard. And then you found out, well, we can't afford it. It will really be bad. And, waste of time for you, waste of time for real estate, just emotionally not a good thing. So always Get the pre-approval to know exactly when you walk into a house that, yes, I can afford this house. If you like it, we can buy it. Don't overextend your budget. So what I usually give you is I give you the limits. That's the maximum that you can do. I don't recommend that you go to your maximum. Always have yourself a buffer. Don't try to go for the maximum. So if we say, the maximum, you can get is a $600,000 home. This is the maximum payment that based on your income and everything can accept. But this is the system accept. You know yourself. You know your financing. You know how much you spend on groceries. You know how much you spend on things. So be your own self-judgment and don't go for the maximum. Go for what you can actually personally afford, not what the bank is approved you for. All right. So that's really the main thing about it. How many years back did check income to be approved? We need you to be working for 2 years. So 2 years of working. However, if you just got a new job right now, if the previous job is in the same field, we can accept that as a 2 year. So for example, I started working for a company in 2020, right? I worked with them for 4 years. I was a HR manager for that company, and then I left them and I joined another company. Was maybe a month gap, and then I started with another company. And I'm also an HR, but at that time I'm an HR director or I'm an HR administrator. Like it's the same fields, the same admin field. I'm just started this 6 months. Can I buy a car? Can I buy a house? Yes, you can. As long as the previous job is in the same field. I'm a teacher. I used to be, a part-time teacher. Now I'm a full-time teacher. But I've been part-time teacher for the past 2 years or 3 years. Now I just started my full-time job. We're going to take the new income, considering that we have the previous time. So we have a overextending your budget. We talked about this. Neglecting your credit score. So make sure that if there's any small issues, anything that's are small on your credit, we can actually improve it. Skipping your home inspection. So we, as a bank or as a mortgage company, do not require that you do an inspection. We require to do appraisal for the value of the home. You have a question? Okay. So if you there's two things. There's something called appraisal and there's something called inspection. Appraisal is something that will tell me that this house is really worth what you're paying for. So if you agreed at 400,000, we have to do an appraisal. If the appraisal come back for 10, for 20, great, you got a good deal. If the appraisal got back at 390, it's a problem. We have to tell you, hey, by the way, the house is only 390. If you want to still get it, even though we don't recommend it at this point, but you love it, you don't care, I really want it, I don't care if it's not, I'm going to be paying, $10,000 more, but at least and it really makes a difference on the financing, but the appraisal, this is something that is required by the mortgage company that you have to get. Now, there's the other one is the inspection. So inspection is important that you need to hire an inspector. We don't require it. We don't say you have to get an inspection, but we say that you should really get an inspection because the inspection, it will go through, make sure the roofs are good, make sure the heating, the air conditioning, the walls, the infrastructure of your home, the foundations. It will go through every single piece of the home. So that way you don't walk into a home and there's an issue that you have to pay for. It's enough that you make in the house payments, enough you make the down payments. So you don't want to walk into a house and there's a problem. So inspection is very important. Don't, overlook it. However, it's not required by the mortgage company. Sometimes it costs $500, $600, whatever the cost is for the inspection, but we do recommend that you get an inspection. Large purchase before closing. Very, very important. I give you a pre-approval, you got a pre-approval, right? Between the pre-approval and actually buying, sometimes it's 2 months, sometimes it's 3 months. Don't go buy furniture during that time. Don't go buy a car. Don't go buy any large thing. Don't go open a $10,000 credit card limit. even though you didn't use it, but you just get the limit. At that time, they know there's something might happen that will impact your ability to pay back. So do not do this. Yeah. So do not do this. Do not make a large purchase on your home. Do not do this. So very, very important. Make sure that you don't make a large purchase when you're about to close. Budget 2 to 5% of your home price for the closing cost. So 2%. Like I said, it depends on the prepaids, how much insurance, how much taxes, how much reserves, things like that will make a difference. So always make sure that you're banking for the closing cost. Yeah. Choosing the wrong financing. So make sure that you go through with the good. So I just want to, I know we've been almost talking for almost an hour and a half. So I don't want to, I know everybody's listening. So I just want to make sure that we go back and ask questions. Anyone have any question regarding the process? Okay, so these are mistakes. Definitely, definitely there's a lot of a lot of other things that you might have, but that's definitely the top common issues or mistake. Again, if you don't switch jobs. They're very, very important. And if you're gonna switch job from company to company, as long as that job is in the same field, you're doing about the same thing, this is when we can allow to switch jobs before. However, if you're gonna switch jobs, just wait until you close first, before closing. But don't try to switch your job, all of a sudden when you do it. So it's very, it's not good. So if you're gonna switch jobs, at least make sure it's the same. If you're forced to switch jobs, at least it's in the same field. Right. Finding your home, always reach out to a real estate agent that really have a good reputation. Ask around, ask people that work with that real estate agent before. Did he do a good job? Did he negotiate it for you? Did he got you a good deal? So ask your friends and family. We can recommend real estate agents that we work with all the time when we know how they're working. So make sure that someone that really experienced in the local market. Sometimes a good real estate agent in Houston is different than a good real estate agent. So we even though they're licensed to do the whole Texas, however, a specialized person in the local market you're in is usually give you the good deal. He knows about schools. He knows about areas that are about to grow. He knows about a new supermarket is going to open in the area, or a new something that will be built. Especially if you're new to that area you're buying a home with, you really want to check with a local real estate agent. Usually an experienced agent who doesn't give up his commission, those are really experienced agents. And even though they can give you 1% back, somebody can offer you 1% back to, you go with, no, don't do this, because, the $3,000 he can give you back, in front of it, he can cost you $10,000 more on the price of the house. So don't just fall for the percentage. Well, I'm just going to take 1%, or I'm going to give you, half of my commission, whatever some of the real estate agents do. A real estate agent, the good ones, they really stick to their commission because they get their commission from the seller, not from you. So they'll stick to their commission, and then when they will negotiate for you, they'll get you a good price. Skilled, they're really an advocate. Make sure sometimes you find a house online, you call the agent that listed the house, that's the listing agent. You call him, you say, hey, do you have a real estate agent? And he will say, you will say, well, no, I don't really have it. You say, okay, well, come on, I'll represent you. So now the real estate agent is representing both. Legally, it can happen, but really, what he's going to be in the favor with, he'll be in the favor a little bit more towards the seller. He wants the sale to be made. He's not going to be really. But when you have your own real estate agent, he will go house by house. If you don't like this house, he'll take you to another one. If the negotiation doesn't work, the seller doesn't like the price, he will go to another one. He will show you comps, different houses. So they will do a lot of good things about it. Trust the retailer. So, if we connect you, to a real estate agent. If you have a friend that connect you, people that used the other people before, the other real estate agent before, should be able to give you a better experience. All right. Anything else? Any other question? Anything that that you have?
So I want to ask a question.
Sure.
So when can you say someone is ready and someone is like, no, it's like 3, 6 months. Someone is like, no, it's just 1, 2 year from now. Like, because sometimes, like, the budget, you actually think you can actually buy a house. I'm just gonna put 5%. But when you, as an expert, review the application, it's like, no, this guy's no less than a 6 month or a 1 year. So, when do you really say someone is ready or no? Like,
Well, again, in order for us to know for sure, everything else is definitely going to be a guessing game, as long as we don't know. So the more information that we know about the application, the more accurate answer I can give on, your readiness. Number one, you have to be, personally ready to buy a home. But then if you say, well, I want to buy a home, I want to know if I'm ready or not because, I wanted to know. At that point, we do that pre-approval. Like we said, the pre-approval is no impact to the credit. It's a soft pull, doesn't cost you anything. So by doing the pre-approval, you'll know for sure. Yes, I know I can do it now, or no, I need to save a little bit more money, or no, I need to, fix a couple of things in my credit in order for me to, to get a better score. So to know for sure, you need to fill that pre-approval letter. Answer your question?
so do you have the link for the application now? Like the
Yes.
pre-approval?
Yes.
Can
So
you
I
send it?
have pretty much everyone's email address. If I don't have your exact email address, you can drop it.
It's affecting the credit. It's
No, no, there's
link.
no impact to your credit score. This is a soft pull, and the hard pull, it will eventually will happen, but it will happen towards the end. So once you find the house, you sign the contract, we already have a closing date. At that time, we will say, hey, I think it's time to pull a hard credit, and at that time, this is when the hard pull happens. But until we agree together it's the right time to do a hard pull, it's just a soft. Okay, so this is all the benefits that we have as far as home buyer goes. So we calculate. So, the closing final steps. These are the final steps to buy a home. We do the sign, confirm all the details about the mortgage and finance. Closing costs are paid. Everything is paid to the settlement company. You don't pay anything to us. Everything is paid directly to the settlement company. So your closing costs, your taxes, your insurance, your down payment, everything is getting paid to the settlement company or the title company. And then once everything's settled, everybody gets their money, you get the keys. That's how the final process it's done. So now everything is done. This is the key. We're done. We're signing. We're in the closing table. This is when everything kind of gets completed. Everything is done. If you are want to get it's almost right now we're almost an hour ahead. If you want to definitely if you want to get the final pre-approval, Kareem, anyone that really want to know if they're ready or not, well, we can you can go ahead and fill the application. You don't have if you don't have even your documents right now, if you know how much you make per hour or per month or per pay, the proof part is the second level if you want to get a final pre-approval. But you just want to know how much I can afford, you can just fill the application. You don't have to submit any documents for now. And the pre-qualification will be just based on your numbers that you put in. Once we verify these items, this is when the final pre-approval letter can be issued. But if you just want to know, hey, I just want to know how much I can afford, here's my income, here's my, social security number, and here's my, how much I can put down. If you give me those numbers, on the application, I can give you a pre-qualification. And then once we get the stubs and the bank statements, and then at that point, we can do the official pre-approval, and then you can take that and look for a house after that. All right, so I know I talked too much, but any final thoughts about yes, okay, so I'll go ahead and send it. It's usually you'll get an invite, so in your email I'll go ahead and send you an invite to apply. So I'll just use your name, address, and no, sorry, name, email. And so if you don't have your exact email, I know I send most of your email, but ping me directly. My number is on my page, so ahmedbadri.com. You have my mobile number, you have my contact information. So give me a call, and we'll go from there. Anywhere. Okay. Any final thoughts? Any final questions from anyone? Okay. All right. If no question, thank you very much. Thank you, Amr. Thank you, Mahmoud. Kareem, Jazakallah khair. Thank you, and I'll talk again, inshallah. Assalamu alaikum.
Messages on your phone.